Welcome to the Scholars Learning classes. Please download the Scholars Learning app. In this video, we will be starting your first ratio, that is the liquid ratio. See, liquidity by liquidity we means that what is the ability of the firm to convert their current liabilities to pay off its current liabilities, or in how much short time it can convert its assets into cash, right? And this is what is liquidity is. Now, on the basis of liquidity, we have divided the ratios into two ratios, that is current ratio, and the second one is quick ratio. Right. Now, let's study about the current ratio first. See, what are the two things that are represented in the balance sheet with the current name and prefix to it? That is current asset and current liabilities. Right, and we have studied the definition of ratio. It is basically a relationship between two figures expressed in arithmetical terms. Now, the current ratio simply calculated the relationship between the current assets and current liabilities. So your current ratio is basically your current assets upon current liabilities. That how much your current assets are there in comparison to your current liabilities, or you can say that how much you have the current liabilities in comparison to your current assets, right? Now your current assets includes those assets which can be converted into cash within a year's time, and your current liabilities are those liabilities which are repayable in the year's time. These are the that can be converted into cash within 1 year, and this can be repayable in a cash within 1 year, right? So your current ratio is basically current assets divided by current liabilities. Current assets includes your cash in hand plus cash at bank plus short-term investments Short-term investments means your marketable securities. Then comes your trade receivables, like your less provision, plus inventories. You have to take the trade receivables and you have to minus any provision if it's there. Then inventories. You have inventories of three types, that is finished goods, stock of raw material, and work in progress. All of them will be included in this. Plus your prepaid expenses. These are your current assets. Then comes your current liabilities, that is bank overdraft, plus trade payables, plus provision for tax, plus proposed dividends, plus unclaimed dividends, plus outstanding expenses plus loans payable within a year. Right. Now these are the items that are included in your current assets and current liabilities. Now what is the significance of this current ratio? See, this current ratios tells the firm's ability to meet its short-term liabilities on time. So the ideal ratio is 2:1, which means your current assets should be twice than the current liabilities. Right? Second type of ratio which is there is the quick ratio. This quick ratio is also known as acid ratio, acid test ratio, and it's also known as the liquid ratio. Now this is more liquid ratio, that the things that can be converted into cash more easily, which includes your liquid assets upon your current liabilities. Your current liabilities are same, you will take as you took in the previous slide we took. Now your liquid assets. Now what are your liquid assets? Liquid assets means those assets which will yield cash very shortly. So all current assets. So if I talk about how to calculate the liquid assets, it is very easy, which means your current assets subtracting the stock, because stock takes much more time in order to convert itself into cash, minus your prepaid expenses so all the other assets are included in the liquid assets apart from the stock and prepaid expenses. Now their ideal ratio is 1:1. It is considered to be better. The idea is that for every rupee of current liability, there should be at least 1 rupee of liquid asset. This ratio is a better test of short-term financial position of the company. So these are basically the two liquidity ratios that we studied. Number one was your current ratio. The next one is your quick ratio. In the next video, we will be solving some numericals on both the ratios. If you have any doubt, any questions, do write them in the comment box, and please don't forget to download our Scholars Learning app.